Hey, Sats fans, welcome back to Swan Signal Live. I'm your host, Brady Swenson. At Swan, we've got lots of things cooking up for you. This is going to be an amazing Q3. We're going to be dropping some big new products, and we recently announced a big new Bitcoin-only conference in LA, November 10th and 11th, the Pacific Bitcoin Conference, Pacific Bitcoin 2022. Go to pacificbitcoin.com to check it out, grab tickets, use code SWAN, SWAN. Get 20% off of your tickets. Of course, these tickets will be going up in price, up only, Laura. So get in now, get in early, and grab those discounted tickets. It's going to be an incredible event, 2 days of your favorite Bitcoiners up on stages, mingling in the crowds. It's going to be a perfect size. I think we're going to hit that kind of Goldilocks zone between being big enough to give that like crowd energy, but intimate enough to really feel like you had a chance to talk to everybody you wanted to. So check it out, Pacific Bitcoin, pacificbitcoin.com. I'm really excited to bring in a couple of guests today, both of whom have been on the show before. Tone Vays is the founder of the Financial Summit, and Mauricio Di Bartolomeo, who is the CSO and co-founder of Ledn. So let's bring these guys in here. Hey, gentlemen. How's it going? Oh, I brought in Sam. Sorry about that. That's Sam. He's our producer. Thanks, Sam. Here's Tone. Here we go. And Tone, okay, this is great. So Tone just, this is a comedy of errors. Tone just dropped off the call. And if I remember correctly, Mauricio, last time you were on the show, Simon Dixon had to bail at the last second, and it was just you and me.
So, I remember that. I remember that well.
Yeah. So here we are again. I'm sure Tone will find his way back to us, but let's just get started. I want to start with you anyway. It's been a very hectic year for the crypto lending and more broad crypto lending industry. We've seen absolute collapses of companies, including Celsius, of course. And there's I would like to hear from you. How is that landscape interconnected? How does that contagion spread? How was Ledn kind of, I guess, separated from the potential, or at least high potential, of being caught up in that contagion?
Yeah, so great to be back here and happy to answer that. I think there's a lot to kind of tackle on that question, so I can kind of break it into sections. I think I can first speak to how I think what kind of were the dominoes that started falling that led to eventually the collapse and potential and failure effectively of some platforms. And then I can go into what Ledn does differently and how were we essentially able to not be impacted by any of these events. And I think as I explained what led to everything, that would kind of answer itself, but maybe we can start there. So if you look at where the issues effectively started, there was a couple of issues, and you can't really just point to one particular issue, but let's start with a couple. So one was the fact that a lot of these companies were essentially taking client assets and turning it right around and putting it all in DeFi protocols, very risky DeFi protocols. They were putting it in all sorts of things, from bridges to lending platforms, etc. And at first, the first thing that happened was that these big bridges and these DeFi protocols started getting hacked, and some platforms essentially started getting hurt from these hacks. They started basically taking losses from these hacks. Then you get into, once the hacks went through, then you start, then Luna and Terra, the collapse of Luna and Terra happened. And a lot of these platforms were using the Anchor protocol to generate interest on their stablecoin accounts. And so when Terra and Luna collapse, that presents another big hit to a bunch of operators that were essentially participating in these incredibly, incredibly risky protocols. And then once the word gets out that some of these platforms are actually interacting with these very risky protocols that are collapsing, that starts triggering basically a series of withdrawals and concerns from the people that are on these platforms. As these withdrawals happen, that starts exposing another issue, which is that a lot of these platforms had taken duration and asset mismatches, meaning they were taking assets like, call it Ether or Bitcoin or stable coins, actually not those because those have a market for them, but they were taking things that didn't have a lending market for it, like BAT, or small cap tokens, just because they wanted to get their AUMs up. And they had to essentially go and swap those tokens for ones that did have demand on the institutional side. And that creates an asset mismatch. Even when you take ETH and you swap it into staked ETH, that creates an asset mismatch because you have to give back ETH, not staked ETH. And so the liquidity is there on the one side of the equation, but it wasn't there on the way back. And then the other mess was that they started getting into duration mismatches. They were taking assets that could get withdrawn at any time, and they were investing it in multi-year payback opportunities, which again made it so that when somebody wanted to withdraw that asset in real time, the platform didn't have access to do this. And so this combination of bad or poor risk management, I would argue, is what led to eventually a lot of these platforms having to stop withdrawals. And essentially, the tide went down and everybody realized that they were never managing risk in the first place. And so I think that's sort of a very summarized way of kind of explaining the sequence of events that led to this. But then I can get into what we do differently and the reason we were not impacted by this. And I can take you through the main differentiators, which are: one, we do not expose any client assets to decentralized finance protocols. So we were never exposed to any of those hacks or very risky protocols that collapsed. That's number one. Number two, we are very, very, I would argue, selective with the assets that we support. We only support Bitcoin and USDC. Those are the assets with the most liquidity in the space and with the most institutional demand. So that focus allows us to do those two things very, very well and not have to be distracted or worried about finding a market for any other asset that may not have one. So that's another one. The third one is that we were the first lender ever to do a proof of reserves attestation. We do them every 6 months. We just published one last week, which again, we believe should be a standard in this industry. And it's surprising to us that we're still the only ones doing this. And again, that ensures that we are properly accounting for every client assets and all of our essentially, we're accounting for our client liabilities, for our assets on the lending side as well. And we do that, again, we ensure that that's done correctly every 6 months. Every one of our clients can verify that their balance to the Satoshi and to the cent was included in the report. The third one is that we do very extensive diligence in our counterparties. So to basically ever approve somebody as a counterparty to Ledn, we would have to see their financial statements. We would have to meet with their management team. We would have to understand their trading strategies. And we have a team internally that tests those strategies to ensure that what they're claiming that they can get to pay us is in fact the case. And so those are, I would argue, broad strokes, some of the main differences that essentially, and how we operate and why we're in an incredibly different position than many of these people.
So basically, to boil it down, you've been acting responsibly, and others haven't.
That's one way to put it. Yeah.
Yeah. That's what I'm hearing anyway. Tone, welcome back, man.
Hey guys. Yeah. So I have no idea. So Restream, like the moment you hit the live button, it literally cut off.
I saw you go away. Yeah.
And then I restarted everything, and the moment I tried to join 5 minutes ago, it again cut off my internet. So I have no idea. So it looks like Restream Live does not act very well with routers in the woods or something.
Yeah, I was going to say, you don't think it has anything to do with the fact you're in the middle of the woods?
Yeah, I mean, look, I've been streaming from here for like over a week straight. Never any issues, except the moment you hit the live button and like my internet is done. I have no idea what happened, but it's working now, so it's good.
Good. Yeah. Welcome back. We got you now. So we were just talking about the differences between Ledn and other crypto lending businesses. Although I hate lumping them in. I'd say Ledn is a Bitcoin lending business, and these other like Celsius, etc., who had exposed themselves with risk, taking way too much risk, etc., etc. So Tone, actually, I want to play this real quick. Let me see if I can get this to play. This is a video of Tone and Alex Mashinsky sitting next to each other in 2019. See if we can.
All right. I'm also looking forward to a lot of the technological features of Bitcoin. Really looking forward to Lightning so we can scale all of these transactions. Really looking forward to Schnorr and other privacy features that will, eliminate that side where people keep saying how Bitcoin is too slow and it's not anonymous at all. And I'm really looking forward to things like Ethereum finally, imploding and going away, giving people an understanding of what it is to have an immutable blockchain. But I see the world of all these altcoins going away, and the faster that happens, the better off the whole world will be.
Safedine?
I think, what I look forward to.
Yeah.
So you played the part where I was wrong about Ethereum going away, but you missed the part where I called Alex Mashinsky running a Ponzi scheme.
That's the part that I was.
All right. I'm also looking forward to.
I think I can scan forward. I probably could have let it play, but yeah, that's the part I was looking for. So during this conversation,
that was earlier, yeah. So
yeah, okay, gotcha.
Man, I forgot that video existed. I actually remembered it a few days ago, or like a week ago now or something. I'm like, wait a minute. I can swear I was on a panel with him somewhere, and I had to like go and search for that video, and then I released I posted a link to the video, and then someone else cut out the important parts and posted that as standalone. So me actually posting that whole video got like 400 likes, and someone else, cutting out the good parts and posting that got like 3,000 likes. It's Mashinsky basically promoting a Ponzi scheme. And man, in hindsight, it's all simple, and a lot of these things take a long time to materialize. I stayed away from it from the beginning. I don't have a problem with leveraging your Bitcoin and borrowing against it. But the moment I hear there is a token in the middle of the company believes in altcoins, it automatically tells me that the founders of that company, the C-level managers,
Froze in the woods again.
He'll come back. All right.
Well, I guess you know what. Well, he did mention that, and I forgot to say it from the very beginning. But that was one of the main decisions we made at Ledn from the early onset. Was we did not want to have a token. We thought that was necessary, and we didn't think it was we didn't think it would set us in a good spot long term. Oh, Tone's back.
Tone's back.
Yeah, I'm back, guys. I have no idea what it is. It has to.
Don't worry, man. Don't worry. Let's just go while we have you.
Yeah. I mean, I've had no issues with my internet here at all, and I still don't have issues other than like this streaming platform, which is crazy.
Sorry, man. Sorry. We're not judging you and the quality of your internet connection. But you were saying that you're starting to get into your critique of Celsius and like having watched it played out.
Yeah, it goes to the mentality of the C-level managers and the founders and the investors of the company. If they believe in the altcoin world, if they have an unnecessary token that may or may not be an unlicensed security, the moment you go down that path, it should tell everyone that this is not a company to be trusted. They probably don't know what they're doing, which is why I don't have a problem with borrowing against your Bitcoin. But you have to do it with a much more responsible company that understands Bitcoin and understands the lending environment. The one thing that this altcoin world has done is it allowed anyone to be an expert in anything because they can get a good ghostwriter, write a fancy white paper, and launch a token, and suddenly they're an expert at something they've never even done before.
So when you were looking at this industry, Mao, did you what did you think about these crypto companies? Were you all let's say the C-level and the high-level managers, et cetera, as Tone just spoke about, were you guys all aligned that this had to be Bitcoin only and really by the book with a long-term vision? I mean, it seems like these other companies are trying to get the quick hit.
So I think this is actually sets up an interesting discussion. The reason we started Ledn was because we wanted to solve our own problem. So I had started mining Bitcoin, and so had my family, and we wanted to continue growing our mines. And everybody would come to me or my family asking us for advice on how to grow the mines. And basically, what it came down to was to grow the mine, you had to sell your Bitcoin that you had made in your existing facility to reinvest and buy more equipment. But the equipment had like a 1-year delay. And during that year, Bitcoin appreciated always, I mean, for the last few years, they had just been continuously appreciating. So nobody wanted to give up their Bitcoin a year before they could get their machines and lose all of that upside. And all we wanted was somebody to give us a loan, to take our Bitcoin as collateral, which we thought was the greatest collateral in the world, and give us a dollar loan. The banks laughed at us, private lenders laughed at us, and we looked around, and there was an option at the time, I believe it was Salt, where you could borrow, but they had this token, and they had raised this crazy ICO, and you had to basically pay your interest with your loan interest with the token, and use the token to essentially sign up. And it was very unnecessary, and it created what I thought was a horrible user experience. And it was essentially tying your loan, your need for a loan, with whatever it is that this company wanted to do with that token. And so we thought it created a very subpar user experience to introduce a token, and B, we knew, at least from the background that we come from, that if we wanted to be in the game of lending against Bitcoin, in order to win long term, we had to have the lowest cost of capital. And who has the lowest cost of capital in traditional finance today? The most regulated institutions, pension funds, etc. And so my business partner, Adam, he comes from the world of institutional financing. And so we knew from day one that if we wanted to get to the top of that mountain, we had to be basically a very clean company, a very compliant company, and make sure that we did things right. And to us, that meant not introducing a token into the model.
There we go. Tone's back in and out. So Tone, what's up? Let's get some thoughts from you on just the lending industry in general. And I'm going to come back to you, Mao, and ask you about Genesis in particular. But what's your take on this contagion that happened? Is there any more to fall, Tone? And are we going to see this over and over again through these cycles? I mean, we've gone through 3 of them now.
Yeah, there's probably more to go. We're just finding out what's going on between 3 Arrows and Voyager and many of the others. And it's really incredible how much money companies and even pension funds invested in Celsius and how quickly that all went out. And this is also at the detriment to the whole tokenized economy. It is just bad when your entire company is dependent on a token. It's over. Once that price of that token trends towards zero. In the traditional markets, companies have stock. So if, say, Amazon stock trends towards zero, it's because the company is doing poorly. And Amazon stock will never go to zero if the company is doing poorly. But in the crypto space, this concept has been flipped upside down. The company performs well as long as the token performs well. So the moment the token trends towards zero, the token drives the company. Even for a company like Binance or FTX or many of these others that you think have a viable business model, because that model started because of the token, the panic in the token will destroy the underlying company because they are too interconnected to the success of their token, because they stuck it in the middle unnecessarily of their company. And Ethereum is the same way. It's no different. To me, Ethereum is just a corporation with an unregistered security. And if there's panic in the Ethereum token, that's it. There's really no real use case there. And there are lots of competitors. And I think we're just getting started. And as people realize that the success of your project in crypto is only as good as the success of the token, people, I'm hoping, are.
We lost Tone again. So I'm going to go back to this Genesis capital question then for you. And I wanted to tee it up to give you a chance to come out of the gate firing. But there's so earlier this week, news came out that Genesis lent $2.4 billion to 3AC, 3 Arrows Capital, and was their biggest creditor. They put down, it was like half collateralized, 50% under collateralized, I should say. So they put down only $1.2 billion in crypto to take a $2.4 billion loan, which is absurd to me. All the crypto loans I'd seen before had been over collateralized. how do they get away with this? And why did this not raise some red flags?
You mean like the basically how did Three Arrows get away with borrowing that amount, or
yeah, I guess it's just a surprising loan structure to me. I was wondering, like, how did that happen and not raise some red flags for the industry?
So I guess to kind of give some context, in the institutional lending space, there are the primary borrowers at the institutional level, or I would say some of the most prominent borrowers at the institutional level are market makers. And market making firms, what they do is essentially they try to close delta neutral price arbitrage across exchanges. And what that means is that they will not take directional risk on the price of Bitcoin. They will simply have balances sitting on different exchanges, so that when they see an exchange selling for 20,100 and another one where they can sell the same Bitcoin for 20,200, they will basically do the simultaneous transactions and collect that $100. So to do this, market makers need to essentially increase the number of assets that they can have available to place at these different exchanges. And so there is a part of the institutional lending, digital asset institutional lending, both in dollars and Bitcoin and other assets, where under collateralized loans are issued to market makers. And this is largely because they need to expand their balance sheets in order to collect and be able to process this arbitrage that I'm describing. And so uncollateralized lending is not it does exist in the institutional space, and it does fill a purpose, and it can be done in a much more the risks can be managed much better. That's basically the entire traditional finance system runs in these types of loans, but they have a series of ways of underwriting that risk and assessing that risk that obviously didn't or has not translated to a lot of the crypto desks just yet. So it's not necessarily all too rare to see an uncollateralized loan. I think the unique thing about Three Arrows is basically how big they were able to get and how much money they were able to take from essentially so many desks. And to make it very clear, we did not have a lending relationship with Three Arrows. We never lent to them. There was never really a commercial relationship with them, so we were not impacted by any of this. And again, that's largely because we have a very strict process for taking on a counterparty, which includes seeing financials, interviewing management, and doing all sorts of other things. But in essence, they didn't pass our onboarding process, but they were able to essentially get there with several other desks, and unfortunately that led to the losses we're seeing today.
Oops, sorry guys. Yeah, that makes sense. Tone's back. Sorry, Tone, man. This is I know you've been streaming all week on your channel.
I've been doing so many streams here. It's great. It has to be the intermediary that we're using that doesn't like this area or something. I have no idea what it is. It's the weirdest thing. It has never happened.
We are being we'll be patient, and we'll take what we can get when you're here. So we were just talking about 3 Arrows Capital and Genesis, etc. I don't know if you have anything to comment on there. Otherwise, we can move on.
Not really. It's the chips will land where they are. People will learn valuable lessons to be very, very careful with locking up your Bitcoin for yield. If you are gonna give up your Bitcoin to a third-party lender, it has to be in some form of a multi-sig, and that's really the only option. And the chasing of yield is, problematic. If you really understand Bitcoin, you shouldn't be chasing yield. It's a recipe for disaster. It's still amazing how Bitcoin can really revolutionize and change the world. And almost from day one, everyone just don't want to accept the fact that Bitcoin itself is the revolution here, and how powerful it is and how powerful it can be. And everyone is just trying to skim in one way or another off of what Bitcoin created. And most people end up in a lot of trouble.
As we were talking about earlier, you've been part of several bear markets, and that follow these big scam run-ups, ICOs and NFTs and lending platforms and DeFi and all of that stuff now. So you said briefly earlier that you think it's just going to continue. Do you think now that this stuff is happening in the broader public, it's being written up in, the likes of the Washington Post, Wall Street Journal, or on CNBC, et cetera, this stuff's getting to be more well-known amongst the professionals in the finance industry as Ponzi schemes and scams, essentially. Does that give you any hope that we'll actually see less of this stuff happening during another bull run?
Not really. This is actually pretty bad for Bitcoin itself, because Bitcoin doesn't have a PR department. And the more of these scams happen around Bitcoin in the crypto space, the more people attribute it to Bitcoin itself. And they think Bitcoin is no different than Celsius, but it's not. And I don't know, people really want to get scammed. I want to say that people are getting smarter and smarter over time. But then I look at the geopolitical landscape and there's not that much hope there as well. So I do expect this stuff to go on. I don't think a lot of people are learning their lesson, and there'll be more of these. It doesn't really change.
What do you think about that, Mao? Do you think we are going to converge onto a more legitimate Bitcoin only based industry and get away from these projects that enable scammers to do their thing so effectively?
So I've started to take a bit of a different view on this dynamic. Like, my view is that everybody wants to, Bitcoin, it's its own thing. Like, Bitcoin, it's its own solution. It operates on its own. And when I think of the other part of crypto, I think of, if you think of the rest of crypto, or a large part of crypto, as not some new technology, but if you think about it as like 2020 or the sort of 21st century version of lottery, and just a gateway for speculation, I think you start getting a lot more comfortable with the fact that so many people keep driving into it time and again, and every cycle people continue just to pile on to these, dreams of 100xing or 200xing, because they just want a lottery ticket. They don't really want to build wealth slow over time. And I think the journey that you see kind of goes along the lines of, you discover this, you see this as a great way of making a huge amount of money on a very quick period of time. Then you pile onto some ridiculous lottery ticket that fails. And then you realize, okay, this isn't the way. What is the way to not lose money? Where is the real innovation in this whole space? And then eventually you wound up in Bitcoin, or you wound up in stablecoin, depending on what part of the world you're in. And when you get there into the sort of rational, use case driven, a value prop for digital assets, which really exists. And we see it every day at Ledn, especially with our clients in LATAM. Like, Latin American currencies are melting right now, and people are flocking to USDC and Bitcoin. That's the problem. Those guys don't really care for a lottery ticket right now. They don't need a lottery ticket right now. But once once times get fast and loose again, and people start getting extra money, wired to their bank accounts, like, every month people got stimmies, and they were sitting at home, that was just like an incentive for people to gamble. And then you create this like universe of unregistered securities where they have no type of restraint for misrepresentation and lies. And you're going to end up with the exact same outcome. And so I don't think it's a product of, there's this universe of speculators that are trying to scam people. Like, I think a lot of people just want a lottery ticket. Lottery has existed since, I think the lottery is probably as old as humanity. And if you look at it through that lens, through the lens of, most of these things are just highly speculative, but also a large number of people just want just that. They want just the lottery ticket for that time being. And that's one side of the industry that gets like they try to make them both, the same, but I actually think that they could not be further apart. And that distinction is becoming more and more real as each one of these cycles kind of goes through. And so I think you see people go from the speculative camp to the Bitcoin camp, but the opposite is not true.
Interesting. Tone, I know you've got something to say on that.
No, I pretty much agree with that.
Nice.
And there's really not much else to add there.
Okay, great. That's awesome. I thought you'd have something to add for sure, but that's okay. it's hard to like take the words out of Tone's mouth, I think. So that's pretty awesome you're able to do that. So let's skip to this, Tone, for you. And then of course, now I want to hear you. I mean, you're running a lending business. So Tone, in the future, do you like what place does debt take in a Bitcoin based economy?
I think it'll be a huge challenge. One of the biggest challenges in moving from this fractional reserve lending system into more of a sound money system for the world is very, very challenging. Just how do you run an economy? The world is used to easy money. And going back to the way the world functioned in the 1800s is very, very different. And there's a big argument to be made based on the technological progress in the 20th century, whether this could have happened under a gold standard. And it's a really, really good argument, whether it would or not. A lot of people are really scared in going back to a sound money world. How do you generate, loans? And I don't know what's going to happen. I don't know what a good solution is. But the way we're headed with all this money printing and all this fractional reserve lending, it's also not going to end well. There really is no magical solution here. So we will see where it goes. And hopefully good companies that know how to lend money properly with proper sound risk management will lead the way.
So I think that's a great answer, and I'd love to add something here, just because I personally am incredibly bullish. Of course, I'm biased, but I am incredibly bullish on the future of lending against Bitcoin, and I'll explain why. So right now at Ledn, we've since inception we've lent over $500 million, and we've had 0 loan losses. We've been able to essentially manage these loans without losing a penny, and the rates for these loans have been coming down aggressively since we launched this business. So just to give you an idea, when we first launched Ledn, our loan rates were 18% for dollars backed by Bitcoin. Right now, our rates are 9.9%, and they continue to come down because institutional investors understand that we're getting a great interest, and we've basically had no loan losses. So we're pretty good managers of that capital. I believe that lending against Bitcoin, if done right, is safer than lending against real estate. And because of that, I believe that the rate to borrow against your Bitcoin will continue to come down to the point where it will become the cheapest asset to borrow against. And I believe that that is going to do so much for the world, because it's one thing for somebody sitting in the United States to say, I don't want to borrow against my Bitcoin, it's too volatile, because I can borrow against my house, I can borrow against my car, I can borrow against my credit. Great for you. That's 13% of the world. 87% of the world, the rest of us, or not us, because I live in North America now, but the rest of the world doesn't have an asset base to borrow against. And if they go to their local banking system, they won't lend against their credit, because guess what? There is no credit system in most places. And while I think it's just one more cool tool for an American, borrowing against your Bitcoin is the first time someone in Latin America has been able to borrow dollars sub 10%. And they will continue to be an avenue for them to borrow dollars at rates that they had never seen before. That access to financing will unlock just so much funding and so much opportunity for that part of the world, because now, until Bitcoin, a lender in Canada like Ledn could not lend to someone in Colombia, because we did not have any collateral that we felt comfortable taking against, or lending against, if the person was on the other side of the world. But now, when that person sends us Bitcoin, the risk profile of that loan is no different than a Canadian loan, and no different than a loan in Mexico or the US. That is a game changer. And that allows us to treat borrowers in Colombia the same way that we treat borrowers in Canada, and the same way we treat borrowers in the US. I believe we're one of the first companies in the world that's ever been able to say that and do that. And I don't think we will be the only ones. And I think this will be a net win for everybody, because I think the world needs access to opting out of tyrannical regimes, and they should also use the same tool to access financial institutions that were many times outside of their reach, because they couldn't afford to get on a plane and open up an account at Bank of America. But now anyone can log online and open an account with Ledn and receive dollars of Bitcoin and essentially get the same treatment as a Canadian or an American. That was a bit of a rant. A pause.
No, it was good.
It was good. I'm inspired. Someone might ask, if we're in a hyper Bitcoinized world, Bitcoin's the base money, Bitcoin's being used for day-to-day purchases as well. Then, and it's not just being used as a collateral asset. How could I how could I use my Bitcoin to be lent something that I need that's not Bitcoin?
I could say, I come from Venezuela. Our money should have been dead 20 years ago.
Right.
Okay. Bad money does not die. Bad money resets. I have seen 14 zeros get removed from my currency, and people still use it today. And you know why? Because they're forced to. And you know why? Because the government has a monopoly on violence that we oftentimes conveniently tend to forget. But the second we want to be, the bad guys and tell our bank to be like, hey, bank, we're not going to pay you in dollars. We're not going to do this. I refuse. They're going to say, okay, sir, do you want to go to jail? Do you want to get detained? Let's bring in, the team, this is what happens back there. And this can happen here too in a long enough time frame. And so all this to say, again, I'm biased, but I don't think fiat dies. There is no way it can die. There's too much political, there's too much at stake for fiat to die. We can't even kill it in a place like Venezuela. What makes us think we can kill the US dollar? And so I think these things will get debased into infinity. And this is why we believe that borrowing against Bitcoin is one of the greatest, long-term value props ever. I say this because this is no longer true today, but I have made, up until not too long ago, I made more money shorting the Bolivar. What I would do is I would basically take a Bolivar loan and I would buy dollars with it. That's no different than owning Bitcoin and borrowing dollars against it. You're basically borrowing a weak asset and you're putting a hard asset as collateral. And that dynamic has allowed Americans to perpetuate their wealth over decades, because in here it's called a mortgage. It's a 5 to 10x short on the dollar backed by a house, but people see it as a long investment in property. It's not. It's shorting the dollar. And so, and this is why it works perpetuously, because central banks make sure that the dollars get devalued over time. This is why your short works so well.
I love it. Tone, here's something to bite into. If the idea that we can't kill a fiat money, which makes sense, we haven't been able to. Now we do have an alternative, right? Or we have actually like something that we could use as an alternative to a state-run fiat money, which would perhaps explain why we haven't been able to kill the Bolivar, or you haven't, or we just hasn't been possible. But we do have this alternative now. So Tone, do you think that Bitcoin can actually kill fiat monies that are backed up by monopoly of violence, as Mal puts it?
Yeah, no, absolutely. And I believe Venezuela has finally started using the dollar a lot more than their local currency, at least from day to day. That's what I'm hearing. I'm actually looking forward to going to Venezuela one of these days, hopefully next year. I really want to see what's going on there on the ground, also several other countries. It's really incredible how, based on what country you live in, you are prevented from visiting other countries. It's like they don't want you to see what's really going on in other parts of the world. And so I do plan on visiting Venezuela and seeing it for myself. But everything, again, comes down to the US dollar. Once the US dollar falters, and it will eventually falter, no currency has been able to survive for more than 125 years. About 125 years is pushing the envelope on a currency. And the US dollar has now been pretty much had its superiority for close to 100 years now. So we are pushing that boundary. And so many other currencies are just dependent on the US dollar. What El Salvador has done is critical. They are a US dollar economy, along with many of their neighbors, including countries like Panama, Costa Rica. They're all dollar-based countries. So if the dollar is ever to falter, where do these countries turn to? There is no other currency. So I think that Venezuela giving people the option to use Bitcoin and getting their people to fully understand Bitcoin is going to play a major role in other countries doing the same. And if the US dollar is ever to have problems, those countries will be leading the way as being on the Bitcoin standard.
All right, I will toss back to you, Matt. What do you think about that, about Bitcoin actually being able to defeat, I guess, for lack of a better word, fiat money? I mean, I know that you said, I would just like to maybe reflect a little bit more on it.
No, listen, the way and this is sort of my mental model, because I've spent a lot of time, I grew up in Venezuela, so to me, money was always broken. So I spent a long part of my life trying to understand how Venezuela was able to not fall apart, because all the things that you're taught about money and how a government operates, I learned to be essentially, not true. I think the fiat system is so hard to bring down because it's set up in a way that it benefits people on both sides of the aisle. So, and I explain what I mean by this. If you listen to the rhetoric, so for example, in Venezuela, the sort of hyperinflation or inflationary playbook goes something like this. Government comes in with a crazy plan to give all these, free things. A lot of people on the other side don't agree. They think that's ridiculous. Nothing's free in the world. And then they start basically trying to sell their local currencies for dollars to kind of protect themselves. And then these guys will come in and say, no, it's not, our exchange rate is not bad because of our plan. Our government plan is great. The people who are making the prices of things go up are these crazy corporate speculators. So we need to basically go and get these corporate speculators. And what the government starts doing is they start controlling the media and the narrative. And as this happens, again, this inflationary playbook worked great for both people, because the wealthy, those that understand how the fiat system works, and they see this happening, they're like, okay, I'm either going to sell out of this local currency, whether it is to buy dollars, or I'm going to buy assets that get repriced as these crazy guys print away. And they're like, fine, I'm hedged. You can go print, do your thing. Meanwhile, the people that are clamoring the social programs, they get their stimmies, unaware that they're never going to be able to afford a house, ever again. But they get what they get to scratch their itch for the time being. The wealthy people get to scratch their itch for the time being because they get hedged, and then the world continues. And it's this equilibrium that makes this system hard to break down, right? And it is also why when inflation starts running in a particular country, the actions from politicians start sounding a lot like the same. I thought I was losing my mind when I saw Elizabeth Warren request a probe on Turkey prices, or when I saw Joe Biden, call out gas stations to bring down your prices. This is exactly what would happen in Venezuela. Like Chavez would go in and be like, chicken producers, you got to bring down that price of chicken. Beef producers, got to bring down that price of chicken. It was never, hey guys, we printed, and this is why your prices are high. They will never take that responsibility. And it's because money has been made deliberately complex to understand, because if people actually understood how it works, a lot of people would just run. And that is a risk that I guess is too high.
It seems almost intentional, doesn't it, Tone?
I do chalk it up mostly to stupidity than intention. Now, there are some very bad intentions, mostly coming out of the ideas of Europe, like the European view on economy. And it looks great. I mean, people in Europe have been living very nice lifestyles, but a lot of their views are actually going to destroy their nice lifestyles. And some things are definitely intentional, but the majority of this stuff is just groupthink and unintentional stupidity, especially in the realm of economics.
Yeah. It is hard to ascribe intention to what the Fed does, and things kind of change out. But it does seem to be like this organically built sort of structure that protects this money because of the very fundamental nature of the money, right? Which is basically a grift from the very top. The fundamental nature of Bitcoin is sort of this, like bottom up sort of money that's not where the top can't take it from the bottom, right? And we've talked about this a lot, it creates a society that has certain values or rewards certain values anyway. And then steers a society in a certain direction, and also individuals for that matter. So Matt, I'd love to hear you kind of riff on that idea a little bit about how Bitcoin and fiat and the nature of money affect society and individuals.
So I'll tell you what I saw in Venezuela, which I think is crazy because some of it is playing out here today. And it's when your currency is debasing at a speed that is so fast, you start taking on two jobs. Okay, your first job is to get your paycheck. For most people, the actual job that makes them get paid. Then in Venezuela, the second they get paid, everyone has to turn into a trader or an investor to protect those savings, because you had to just work your ass off all week to get your paycheck. Now you got the paycheck and you got to work your ass off so that paycheck does not melt in the next 24 hours or 48 hours. And so from there on, you run out and you start thinking, okay, what can I do with this, right? Most people just want to buy dollars. That's what most people want. But in these hyperinflationary scenarios, the first thing the government does is they start restricting the amount of dollars you can buy, restricting the amount of crypto you can buy, restricting your foreign credit card purchases. And so you're locked out of the dollar, okay? Then you're like, okay, can't buy dollars. The next thing that happened in Venezuela was other assets start getting monetized. So because a car can get repriced, but your paycheck won't, people will buy a car, people will buy tires, people will buy anything that can get repriced. And essentially, you when money stops working, you start sending people into the barter system in many ways. And what I see some of that happening right now, the people in North America, 2 years ago, last year, like if you saw the Reddit movement, the GameStop movement, that was just a nation of speculators all last year that were essentially sitting around and moving hundreds of millions of dollars out of uncoordinated pump and dumps because they had nothing better to do or no better way of making that same amount of money. And so you start turning from an actual value. And the other thing that starts happening when inflation starts running high is that your time preference shrinks and shrinks and shrinks and has to shrink, because when inflation is so high, you can't forecast a 5-year investment. Your forecast gets cut down to 2 years, and then it gets cut down to 1 year, and then it cuts down to 3 months. Your projects start becoming every time smaller and smaller. Big things take time, so infrastructure slows down entirely. My city in Venezuela looks the exact same way that when I left. There's not a single new building. And so it does a lot of things to society. It turns society into an army of short-term thinkers. And they almost like by necessity start becoming speculators, because it's better off, it pays better to speculate than to sit down and produce, because producing becomes impossible.
Tone, you must have thought about this over the years too, right? I mean, is this one of the reasons that you're such a big believer in Bitcoin?
Yeah, for many reasons. My number one reason for believing in Bitcoin from day one was the unconfiscatability nature of Bitcoin. And people still don't get it. Many people watching this program get it. I've been talking about this for 6 or 7 years now, that for the first time in human history, you have an unconfiscatable asset. And people in Venezuela and other countries going through hard economic times and tyrannical governments holding them back, people don't realize that they can now hold wealth in a way that cannot be confiscated from them. They can leave that region with wealth in their head, something that has never existed before Bitcoin. And that power alone is enough to make Bitcoin one of the most dominant assets in the world. It's great that you can send it to anybody, anytime, without a middleman. I mean, that's all good. It will, create more adoption for Bitcoin as a currency, but as an asset to protect whatever wealth you have, it's unprecedented. We've never had anything like it, and we probably never will again. That property alone is so important and critical to the world that every day that goes by and Bitcoin network remains stable, I just get more and more confidence in that particular property of Bitcoin.
Hence the unconfiscatable conference, right?
Yeah.
A little plug.
Yep, thank you.
When's the next one?
Honestly, I don't know. It's
Okay.
organizing a conference is a complete and utter nightmare, as I'm sure your team at Swan is well aware. Wait till you get a few drinks in them, and then you're really gonna find out what it's like. So it's a very hard process. There might be another one towards the end of next year, but I needed. I'm gonna be taking some time off. I've just been doing too many events, too many conferences, and this particular recession has been horrendous. Unconfiscatable is likely to come back in October of 2023. Once I'm done with a couple of financial summits this year, one in 10 days in Dominican Republic, then one in Bali in November of this year, I'm taking a full break from everything for a few months, and then Unconfiscatable probably October 2023, and then the next financial summit probably November 2023.
Okay, fantastic. I'm going to actually finish up on the YouTube portion of the show with a question for you, Tone, and then we're going to be heading over to Twitter Spaces after this. We're going to grab our phones after we shut down this stream on YouTube. So those of you who have been listening on Spaces will be there soon. Please think of some questions. Go ahead and raise your hand and get a line formed, and we'll ask some questions of these guys. So Tone, I remember watching you back in the day. And first of all, thank you, because watching you and Jimmy back in the day was a big help to me. It was like you guys and Ansel Lindner who were making great content back then before all the pods that we know and love now started up. But I remember you talking about how this run up or whatever was going to go to about 60K, 55, 60K or something like that. And I remember thinking, well, that's weird because everyone else says something way different. And you were sort of this outlier. And it seemed way too reasonable. But here we are. And so am I remembering that stuff correctly? And did you kind of stick to that prediction? Because you are, I mean, this is what you do, right? Like, is try to kind of figure out how to find price signals and all that stuff.
So you're remembering it correctly. The first time we hit 60, it's absolutely correct.
Yeah.
So when we started rising in 2021, I always envisioned the current bull market, and right now we're clearly in a bear market, but I envisioned the 2021-2022 bull market to be similar to the 2013 bull market, not from the percent gain perspective, because that was just nuts. It was from $10 to $250, down to 50, up to 1,000. That was too much percentage wise. But I always envisioned the bull market, once we got above 10,000 for the first time, since 2017, I pictured it to have a top around 60, 65,000, which is what happened. Then I expected a bit of a dip, 40, 50%, which is also what happened. Mm-hmm. But then when we went back to the 60, 65 zone in November, I expected us to go significantly above the prior swing high. As a trader, as a technical analyst trader, I don't believe in double tops as a reversal situation. I will always place a bet that the break of the prior all-time high is going to lead to significantly higher prices. So while I was calling it pretty well, it all kind of went wrong in November of 2021, because I did expect us to go all the way to 100K and beyond. I didn't have crazy expectations like 300 or 400, like some very popular analysts that are friends of mine as well. I was a little more reasonable, but I certainly expected 100K by now, straight through New Year's, this past New Year's. That did not turn out that way. And that's why it took me a while to admit that there was a bear market, because at that point, I needed us to break the prior swing low. But the prior swing low was at $30,000, which took place about a year ago today. So by the time we break $30,000 coming off of 68K, it's a little too late to say, hey guys, we're in a bear market. Well, yeah, great job. It's obvious by now. So right now we're sitting in a position where I think the bottom is in. We still need to just hang in there the rest of the year and stay above 20, 22,000. And at that point, the halving hype is gonna take over, and I really think the worst is behind us at this point.
Thanks, Tone. I think Brady popped off there for a bit. So my name's Sam. I'm the producer. But so you just called the bottom, man. It's a pretty bold call. I hope it plays out. Mauricio, you also do a little market update. I was checking out your the blog post that you do on Ledn, and so I was surprised where you kind of follow the markets really closely and provide commentary. Do you have any commentary for maybe what we'll see in Q3, Q4? Maybe not with price action, but in general.
Yeah, and I go back to whether people like it or not. I think unfortunately a lot of asset pricing is driven by the Federal Reserve and their big decisions. I think that kind of in the kind of simple way, the simple mental model that I use to think about this is most assets are purchased with financing. Like if you think of a house, if you think of a car, even if you think of your cell phone, a lot of these assets are essentially financed. And when the Fed raises rates, it essentially raises the rates or the cost of every single thing that's financeable. And therefore, the amount of things that people can afford basically becomes lower and lower and lower as the Fed raises rates. And so the Fed is on a campaign right now, raising rates like crazy. Tomorrow we get to hear from the ECB. The European Central Bank is looking to raise rates for the first time in 11 years tomorrow. The Fed is looking to probably do another 75 basis hike, in their July meeting next week. And where I think the turn will come is the central bank is great. They can be as aggressive as they want to be, and they can bang their chest all this time, as hard as they can, and say that they want to be aggressive. But the reality is that the United States goes into elections in November. And so my thinking is that, and again, there's no real formula for this, but it comes from a place where most politicians just don't want to go into the polls with an angry population. And so typically what I think we'll see some relaxation of some form, whether that's a fuel subsidy for lower income houses or some type of, another version of the stimmy or something. I think that's probably, we're going to see something along those lines prior to the November election. And I think by the first quarter of next year, the Fed will essentially hit a wall on how far they can raise rates. And they will basically start acknowledging or admitting that they need to start tapering. And I think at that point is when the risk assets turn back on. I think end of Q4 or Q1 next year is probably when you see the risk assets really turn up.
Yeah, I think that's a great point. People seem to forget the political factors when they're forecasting, when they talk about these election cycles. Well, I think we'll finish up here. Brady, I think maybe had some technical difficulties, but we're heading over to Twitter Spaces. So if you guys are listening in, make sure you have some questions for these two gentlemen here. I appreciate both of you guys coming on Swan Signal Live. It was a great discussion, and I really enjoyed it. So Brady will be over there too, so you can carry on over there. Thanks, guys. Really appreciate it.
Glad I'm not the only one with technical issues on this platform today.
Yeah. I think Restream's having a tough day, but I appreciate you both. So I'll see you over in Twitter Spaces, all right?
Awesome. See you guys there.
All right, guys. Thanks for following Swan Signal Live. Once again, I wanted to throw a little plug for the Pacific Bitcoin Conference. You can check it out at pacificbitcoin.com. It's happening November 10th and 11th. It's going to be a party. Also, check out Hard Money with Natalie Brunell. It's on YouTube. It's a weekly news show that Swan recently started up, and it's great production value. It's Natalie Brunell is professional and just really good signal to noise ratio happening on that show. So that's it for Swan Signal Live today. Head over to Twitter Spaces to ask Tone and Mauricio any questions that you have. And thank you so much for joining in today. Have a good one.